Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, February 27th, 2025. Let's take a look at the charts. I will start really with this one. There's a lot to be said here, and that is that last Friday, we closed the week below 340.80 for the first time. That was the new downside 3/8 Fibonacci from the January 23 low against that recent high last December. That area held very roughly a few weeks ago, but last week we closed below it. We also closed back below the 344.98 two-year channel top for the first time after having closed above it a couple of months earlier, 2 to 3 months earlier. So that signal, the settlement last week below 340.80, did indicate and does still 251.32. That is a two-year channel bottom, 251.32. I'd mentioned how we could get, a more vertical descent, a more rapid descent, given the fact that these, I call them church steeple rallies, tend to play out in symmetrical fashion on the backside, and that is kind of what's happening right now. Now, on the way down, I've mentioned this descending channel bottom at 282.47. This is a 3-month structure. We did not test it on Wednesday, but we probably will today, Thursday. 282.47, able to contain weekly lows. And if tested, assuming it is, we can round up from here back into the low 340s again within 1 to 2 weeks. But keep in mind, 251.32 remains our objective, and so there's every reason to consider the possibility of closing today below 282.47. And if we do, you have one of two choices. You can either exit your trade and reverse and go short to 251.32, or you could hang in there. That could be the other option. It depends on your time horizon, your trading size, your position relative to your overall trading account, et cetera, et cetera, et cetera. This falls into the entire realm of trade execution and risk management, and that is something that every trader has to work out for themselves, and there is no right answer for anyone. And I'm not going to really go there too deeply at this point in time. But if we close today below 282.47, over the following 3 to 5 days, possibly tomorrow, Friday, we could reach our objective at 251.32. This two-year channel structure may well contain selling not only through the second quarter, but even into later year. And yes, I'm going to get busy here over the weekend and maybe even tomorrow. Or before Friday's letter. Depends on how far south we fall. Let me just put it this way, that if we clearly settle below 282.47 today, I will get busy in terms of what are the likely outcomes if we were to close below 251.32. And looking at the chart right now, and I can just kind of see what I would look for, would be below 150 and above 100. In other words, it's tough to imagine on this chart with all the line studies, but if you take a trend line from the November 21 high and cast it across to the December 24 high, and then project that against this bottom, January 23, it'll take you into something somewhere in here. And so, yes, another 100 points plus to the downside if we were to close the week tomorrow below 251.32. And that's just a long shot. I don't see that happening. But it is possible, and that's why I bring it up. If we close today below 282.47, we could test 251.32 by tomorrow, that is Friday's close. And if we settle tomorrow, Friday, below 251.32, bearish continuation. No good reason to be long Tesla. If you buy it in the low 250s, which I think is the recommended course of action right now, maybe you're short from the low to mid 340s over the last week or so, holding out for the low 250s. Great if that is your position. And if you buy 251.32, not just to cover a short position, to reverse and go long, closing below 251.32 is your indication to get out and play the short side once again over the following, 1 to 2 months or sooner into somewhere, I'm just going to call it 125. I don't know what the exact number is, but you will be presented that here shortly. Let's cover the up. Well, let me continue with the downside here. I forgot to show you this chart. I've got 276.84. Now, earlier in the week, I called this a convergence, and it still is roughly. In other words, we could break 282.47, tag 276.84, and then bounce to close the day above 282.47. And as long as we close above 282.47, not only is the low 340s in reach over the next week or two, but there is this newly descending channel top at 379.92. And lo and behold, over the next two to 3 weeks, it actually drops into the low 340s anyway. So it's going to be interesting to see how this descending channel top will line up with this low to mid 340s over time. Over time, it will converge, and the timing of that approach is everything, really. So let me get back to this chart. Breaking 282.47 signals 276.84. Breaking 276.84, I think we probably have a good high for the day, and we can continue to deteriorate through the day. I will mention, and I didn't underscore it, but 271 even. Let me take you to the weekly chart here. 271 even is this July 24 high that lasted for several months. I don't think it's a good area to buy even on a daily basis. But, if you're an aggressive day trader and, we break, well, bear with me. I'm going to go through the charts here. Where are you? Yeah, if we break 276.84, 271 even, just a number I wanted to point out. This sort of underscores the fact that every one of these points has meaning, and then we weight them accordingly based on, the different time horizon studies and such. But once again, I'm going to finish the downside with a settlement today below 282.47 signals our longer-term objective at 251.32 over the next 3 to 5 days, and that could be by tomorrow's close. Working upside, we have this trend line off the lows over the last month and a half, 304.82. And once again, this can be your two-sided trade for the day, selling 304.82, buying 282.47. If we push through 304.82, 325.10 is attainable today. That is the low from several weeks ago. It held for about 2 weeks before we broke it a couple of days ago. Pushing above 304.82, we could short cover rally our way to 325.10 on an intraday basis. 309 even, once again, that's a minor point. That is yesterday's high, and pushing through 309 even does add fuel to a short cover rally, if only on an intraday basis, up to 325.10. 325.10 may well contain today's highs, and if we close today above 325.10, we tomorrow test that 340.80 to 344.98 area. We have a convergence right now with a newly formed descending channel top that is about 2 weeks in the making, and that will add meaning to the low to mid 340s. Even if we close above 345.10, which is not going to happen today, I am only now anticipating this descending channel top. As you can see, we recreate these. We reconstruct these every day. We put out a new low. I call this the dynamic approach to trend identification. And what was just a few days ago in the 407 region, as you might recall, when our lows were much higher. Now our lows are much lower. That makes us more steeply descending channel top at 379.92. This 379.92 is the level to settle above in the coming 2 to 3 weeks for signaling, a good low through the second quarter. The following couple of months, 1 to 2 months, 2 to 3 months, then in reach of that long-term resistance at 507.45. So yes, a weekly settlement back above 344.98 would be a neutralizer of bearish momentum, but in terms of actually reversing momentum and shifting it decisively into the bullish camp as we move into the later second quarter, that comes with a settlement above 379.92, and we'll be keeping you surprised at this level as we move through next week. I think I've covered it all. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We put out a stock pick on Tuesday, Eli Lilly. We've got another one coming out today, Thursday. We also have weekly Apple stock, daily Triple Q, daily SPY, etc., etc., etc. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla, and you have a great day.